Hi, everyone. We're here with Mitchell Moos, um, manager and journalist at Crypto Briefing, um, ex Crypto Slate, and a UW student and friend of mine, as well as the UW Blockchain Society altogether. In fact, he's one of our founding fathers, our earliest member, and the initial organizer for the club. So we're really lucky to have him here. And he's been up to some crazy stuff over the past years and has some awesome experience and is really deep in the blockchain and crypto space. So with that, I'll let him introduce himself, and we're just going to have a little bit of a back and forth and sort of discussion slash interview on some of the stuff that he's been up to over the past few years. So with that, I'll leave it to you, Mitch.
Yeah, thanks. Hey everyone, I'm Mitchell Moos. I am the managing editor at Crypto Briefing, formerly the editorial manager at Crypto Slate. And I've been working in journalism for over the last 2 years, and it's all been crypto journalism. So it's been a really exciting and kind of unexpected career path because I went to UW and I studied accounting, and I never thought I would end up being much of a writer, but it seems like sometimes that's just how the opportunities reveal themselves in the crypto space. You really don't know what to expect, and you have to be open-minded about what kind of work you're going to be doing in crypto if you want to work in the blockchain space, because it changes so much every single day. And like the industry as a whole is so much different than what it was in 2017. And 2017 was a lot different from 2018. 2019 was crazier and different than 2018. And now in 2020, it's hard to know what to expect.
Cool. Yeah, thanks for that. And talk to us about how you got involved. Was it in 2017? And what was like your sort of first foray into the world of crypto and blockchain?
Yeah, it was in 2017. That's when I first got seriously involved. Before that in high school, I had a bunch of friends who considered themselves hackers, and they're the kind of people who ran Linux and went about talking on my IRC channels and encrypting their communications. It was kind of silly, but they stumbled upon Bitcoin, and they coerced me into mining this stuff so that we could play around with it.
So you were mining Bitcoin before 2017?
I was, but not seriously.
Okay.
For clarification, 2017, I started mining Bitcoin seriously. And my brother and I, we put our life savings into Bitcoin mining equipment. We made my mom's apartment into a sweat lodge.
I'm sure she was pleased with that.
She tolerated it, which was surprising, but it was there was so much mining equipment in there. If you turned on the microwave, it would trip a breaker in the house, and you would have to turn the power on again. We were drawing so much juice out of that unit; it was ridiculous.
Right. Well, you were in Washington, and the electricity is fairly cheap where you work. Is that right?
So residential rates are about comparable, but if you were able to get commercial or industrial electricity rates, Washington has some of the cheapest electricity in the world.
Gotcha. Okay, cool. So you started mining seriously in 2017. You were only in high school at the time.
No, so before 2015 is when I first got exposure to Bitcoin. And
okay.
I had 2 laptops trying to mine Bitcoin because they both overheated. Both their CPUs got shot. And yeah, from there I was kind of disappointed. It kind of put me off from Bitcoin for a while until about 2017. I ran the numbers and I was just like, damn, this mining thing, this whole thing seems a little bit ridiculous, but the numbers don't lie, and you're breaking even on getting a graphics card in 3 months. And I was a hardcore gamer, so I knew that a good graphics card is hard to come by.
Right.
But getting 50 new graphics cards for free in 3 months, I was just like, that's too good of a value proposition right there. So my brother and I were just like, all right, we're going to do this high risk venture. And worst case scenario, Bitcoin goes to zero. It's not worth anything. And we have a bunch of computer equipment that we can resell or use. It's like, that doesn't seem so bad. At least it was better than buying something weird like Ethereum or some other cryptocurrency that has no tangible value. You have no idea what it's useful for. It just seems too speculative. So I'm just like, but hard computer hardware, that's something you can get behind.
Yeah, that makes sense. So you were basically arbitraging the value of Bitcoin and keeping all of your exposure into computer chips to
Right. So
de-risk.
I mean, it was just hedging my risk really,
Right.
because even if Bitcoin went to zero, the most you can lose is, I don't know, roughly 50% of your initial investment in computer hardware. But the
Okay.
upside for the computer hardware is that you get a source of revenue and relatively risk-free because the break even is in 3 months.
Right. Okay. So before we go on with sort of your exposure into the crypto world and how that path continued, what is the current state of mining? Is it still the case that you can break even in 3 months? Is this still a profitable venture that
Oh,
my friends
absolutely.
and I should get involved into?
No.
No.
So yeah, mining was the Wild West. Preset 2017 when prices were crazy and everyone was operating a mining rig. It was really a cottage industry.
Uh-huh.
And there was a much larger market for using consumer computer hardware to actually earn, like mine profitably.
Mhm.
But now mining has become much more centralized, a lot more consolidated into larger industrial players. And now the people who are miners really are professional server operators and people who can run a very efficient operation. Because mining is a commodity. It's not like something where there's any long-term differentiation between competitors. The only way to achieve long-term differentiation is to have better mining hardware equipment, like Bitmain or Canaan, and they're able to design the chips and the actual supply. Or you're a cost leader and you're able to have a much more efficient operation in terms of your cost structure, your electricity, your depreciation, your labor, and your access to computer hardware.
Got it. So we'll check that off the future career path list for myself.
No, if you still want to get involved in mining, it's still very possible. You're just going to have to join a larger organization. And it's a big field. It's quickly growing, and there's not too many people who would be considered experts. So
Hmm.
if you can make a name for yourself as like, I don't know, low-level designer of the actual mining algorithms, or someone who can um, help with like chip design, or someone who's familiar with like how to set up a heat efficient server center, you can definitely
Mhm.
make a lot of money in mining.
Cool. So you mentioned algorithm design and want to push the journey through the life of Mitchell Moose along. I know that you had a company that worked on algorithms. Tell me about the mining algorithms that you worked on and how that played a role into your path into crypto.
So, I mean, the first serious startup that I had was trying to find, well, initially we were just mining because we're just like, oh, this is cool and profitable. And
Right.
then we realized, damn, people who do mining are really unsophisticated and they're not doing a lot of optimization. So it was for me a full-time job sourcing and trying to build the most cost-effective mining rigs.
Mhm.
And as part of that journey, we started seeing that there were opportunities to increase your revenue quite substantially, because in 2017 and early 2018, there was just a huge number of different coins that you could mine using conventional computer hardware profitably. And
Right.
those coins would change all the time. They would change by the hour. So we said that what if you're able to create efficiently an algorithm that can allocate computing power to what's most profitable at the time and efficiently convert that back into like um, one currency, like one cryptocurrency that you can actually store. So whether that's converting it back into Bitcoin or Ethereum, but finding a way to do that programmatically, because the most profitable coins change so frequently that you would be dealing with increments of like sometimes less than $1.
Right. Right.
So there's a lot of transaction costs and a lot of friction. So just tuning something where you're able to design an algorithm that can take into account those frictions while still optimizing for your profits. And once you complete that optimization, back then you're able to earn some 10, 15% more top line revenue using just a smart algorithm for basically doing computational arbitrage between different protocols based on what the trading price is. And by doing that, I mean, 10 to 15% might not sound like a lot, but if you're a large mining operator and you have tens of millions of dollars in equipment, then that's a lot of money.
Right. No, yeah, that makes sense. I mean, 15% is a lot of additional revenue to be receiving. Um, cool. Yeah, it kind of plays into sort of uh, algo trading mindset. I know you have a little bit of background reporting on algorithmic traders and speaking to them. Talk to me a little bit about how your experience thinking about mining arbitrage algorithmically has played into how you look at trading right now with crypto.
Well, trading, trading is a nasty business in crypto. It's really the Wild West because people are located anywhere, and these assets are largely, oftentimes, completely unregulated. And if you're an algorithmic trader, it's in your interest to make sure that you trade on some exchange that has the loosest regulations possible, because that allows you to increase volumes and do all sorts of weird stuff like a lot of the opportunity in crypto is that it can help circumvent regulation, and a lot of the risks in crypto are that it circumvents regulation.
Right, right.
So
Where
I would
is
say,
most of this happening?
say again.
Where is most of this activity happening? What's the most beneficial environment for traders?
Well, it depends. Is it for algorithmic traders specifically?
Hmm.
Well, you're talking about like a lot of, if you just go to CoinMarketCap and look at the top exchanges by volume, you'll see a lot of the exchanges where there's quote unquote wash trading. But wash trading really is just a function of algorithmic traders taking advantage of some sort of incentive scheme that these exchanges have to boost their volumes. So obviously those exchanges have a lot of algorithmic traders.
Gotcha.
Other opportunities for algorithmic trading happen between exchanges where there's differentials in terms of the price. Like the exchanges aren't always consistent in terms of how their pricing operates. Like exchanges in Korea tend to consistently have higher prices than the US on average. And depending on how much regulatory overhead there is in different jurisdictions, the price tends to adjust accordingly. So for example, on Bitfinex, where there's typically less regulation and most of the assets are denominated in tether, where there's counterparty risk to owning those tethers, the prices tend to be lower if adjusted into dollars or higher if adjusted into tethers on that exchange.
Right.
So ways to, if you can mitigate the counterparty risk and conduct these transactions efficiently between different regulatory environments, then there's definitely opportunities for arbitrage.
Interesting. So it sounds like on the one hand, there's this regulatory arbitrage, but on the other hand, there's these different incentive schemes that different exchanges will implement. And all of that plays into the pricing of assets that theoretically should be priced efficiently or priced equally.
Yeah, because if crypto really wasn't an efficient market between each of these exchanges, and if it really was open, there wouldn't be any pricing difference.
Right.
But
right.
There are constraints on how crypto can move because of how it interacts with the traditional financial infrastructure in each of the countries. So for example, in Korea, there tends to be a premium because there are tight capital controls in Korea where you can only take out, I think it was $50,000 worth of won per year. So the operators who have a license to transmit large volumes of money and exchange large volumes of won to dollars or won to a different currency are the ones who can actually take advantage of that arbitrage opportunity.
Gotcha. And do you see this sort of market inefficiency as persistent through time, or are we going to live in a future where someday Bitcoin and other cryptocurrencies are actually priced efficiently and there's sort of this opportunity just gone away?
Well, it depends. It depends if Bitcoin becomes a mainstream asset and if the volumes become commensurate with something like that is trading widely. Because right now, Bitcoin trades like an S&P 500 stock, where there's only like 100 on a daily basis. There's less than $1 billion in volume. I mean, that sounds like a lot, but in the grand scheme of things, it's tiny compared to other assets like gold, where you're seeing tens of billions of dollars of gold trading volume happening in a single day.
Yeah.
So,
yeah, that makes sense. I mean, the foreign exchange, like currencies, I think people have said figures like 5 trillion a day get transferred interbank. And that's just orders of magnitude more than equities.
Yeah.
Okay. So, maybe we live in a world where some crypto starts to climb that ladder and gets classed in terms of a more highly traded equity. Then we would start to see some of these inefficiencies go away.
Yes. So if you really see these volumes increase, then yes, it would. But right now, the amount of trading activity that's happening on these different cryptocurrencies is so small that there's a lot of inefficiency. So that's good news for algorithmic traders. If you're an algorithmic trader and you're dealing in small volumes and you want high returns, so if you're only trading with a few $1,000,000, then crypto is the perfect market to take advantage of, because you can make really high returns on a small investment, but once you start to scale up your operations to tens of millions or the billions, then there's just not enough margin for you to operate profitably in the cryptocurrency industry because there's just not enough volume and there's too much risk.
Okay, interesting. Cool. I want to fast forward a little bit to some of the stuff that you've worked on um, as more of an operator outside of the initial startup that you had, because I really want to talk about what you've learned at Crypto Slate and Crypto Briefing with some of the hiring and team building that you've done. And I kind of want to tie that back into the work that you've done building the blockchain society at UW. So tell me a little bit about the experiences that you've had between your startup and working at Crypto Briefing, where you might have picked up some of these operational skills.
Well, I did have one intermediary job between the startup and Crypto Slate. So I worked as a project manager for another startup that was trying to build out software on like Hyperledger and some other decentralized like storage solutions.
Okay.
So I did manage a team of like 6, 7 software developers there, and really, I'll say just throughout university, it's been a lot of organizing to get the skills necessary to run an efficient business. So for example, before I went to the University of Washington, I went to Oregon State University, also studying accounting. And I was one of their main event coordinators there. And I've run events that have had more than like 500 people and dozens of different components and contractors. And to organize something of that scale, it just requires a lot of persistence and a lot of planning and the ability to tolerate things going wrong and being able to think on your feet and fix it on the fly, because something will go wrong when you have those many moving parts operating at once.
Right. It sounds like a complexity management game and sort of trying to stay above water throughout
Right.
a bunch of.
Even before that, like I had been running businesses in high school where I was doing, I mean, you remember that whole big drop shipping phase?
Yes.
I never got involved in that.
Some would say that that's still occurring.
Oh God, man, drop shipping is such a scam. Anyway, I wasn't doing drop shipping, but I just sold a lot of inventory on eBay and Amazon, like before it was cool. And I had access to some of the bigger like sporting knives companies in Oregon, because there's a place called Knife Valley in Oregon that manufactures a lot of the high quality cutlery in the United States.
Interesting.
And they had a lot of inefficiencies in terms of how they were exporting their goods internationally, because it's kind of they're kind of a controlled good. If you're exporting any type of like knife, then you have to go through kind of a more onerous customs process.
Right.
And also, they had a lot of surplus inventory that they're not able to move because their distribution channels were rather inefficient. So a lot of my job in high school was just selling tens of thousands of dollars worth in like sporting knives and cutlery.
Wow, that's amazing. Was it all online that you were doing this?
Mostly online, yeah, 95%.
You weren't going door to door.
No way. You
Okay.
can't achieve scale door to door.
Right. Okay, cool. Well, before I ask you a bit about the blockchain society and sort of the process for how that formed, I think it'd be really interesting to hear about that, because that, of course, is what's making all of this possible right now. The actions that you took while you were in university. Tell me about your experience at Crypto Slate, Crypto Briefing, and some of the things that you're proud of that you implemented at those places.
I would say that like journalism and the media is kind of a weird business to be in, because it's simultaneously going through a transition period right now, where a lot of the old media companies, like traditional newspaper companies, are going out of business or downsizing, while at the same time there's a proliferation of niche media providers.
Right.
So the industry really it's going through a phase where the industry is actually becoming more distributed over time, which is really strange.
Right.
Because usually over time, what you see in an industry, it tends to become more consolidated, and whatever leader they had tends to take advantage of the network effects and build an entrenched position. And it tends to be very defensible. Like you typically only have in a major industry like media or in like tech, for one specific good, like 3 or 4 different providers, and that's it. But the interesting thing with media is that it is becoming more distributed over time because of the threat of substitution. So before, the primary way that people got information was through both television and these newspaper providers. And television almost exclusively, oftentimes would cite most of their stories from print media. So if you watch CNBC, you'll see how many times that like a news anchor will cite an actual like physical publication to talk about a story. Like oftentimes the news media companies, they don't, like the television companies, don't actually do that much of their own reporting. Most of it's by leveraging existing infrastructure through print media companies.
Sure.
So,
and is that going away?
Yeah, it is going away because now with both digital, it's harder to monetize the actual information. And it's becoming, instead of a industry where it's based upon networks, it's becoming a cost-based business. So now,
right,
like just media in general, information in general, is becoming more like a commodity. And now you're going to see it's going to be more like mining, where it's lots of smaller providers competing on the basis of cost rather than differentiation. And the people who survive are going to be the most efficient operators, or the operators who can carve out a very specific niche. So you'll see a lot more publications that cover exclusively one topic: smaller, more nimble, agile, low-cost structure, and they'll be covering something like sports, or exclusively sports, or something like, I don't know, cannabis, cryptocurrency, small businesses, entrepreneurs, and they'll be very topical, and that's the only way that you can survive in a business where it's harder to achieve differentiation, and most of the competition happens on the basis of cost if you're talking about general media.
Yeah, I think that makes sense. The internet has definitely made it that there's almost no marginal cost for additional distribution. So a lot of these other costs become incredibly important. And if you can get a small niche audience to pay, even if it's really small, if they're paying enough, because your costs are so low, that can be a way that you have a viable and surviving business. So I definitely see this nicheification, if you will, for media in the future. Interesting. How has that played a role into the type of content that you want to produce? And maybe could you speak about the content strategy?
Yeah, I'd say there's some of the innovations that I would see myself making. And because I don't have an old school background in journalism, I really looked at this, like people might chuckle at me, but I really looked at this as a business problem. So, I mean, really the content you're producing, that's your cost of goods sold. If you're trying to get that as low cost as possible, and you're trying to maximize the revenues that you make, and the potential revenues are determined by the number of impressions that you get, time on site, and also the long-term web presence that you're building on the internet. So like SEO optimization, and finally, this is an intangible asset, but the reputation that you're building for the publication. So depending on which of the main variables you're trying to optimize for example, if you're a publication that cares more about long-term growth, you want to focus on like long feature writing, investigative journalism, trying to amp up the reputational component of your business. But in the short term, you're going to suffer in terms of profitability, because that kind of content tends to be very expensive to produce and does not generate that much more traffic than like a high volume, lower quality strategy if you're trying to maximize reviews. So if you want to look at the other end of the spectrum, so we can actually position all media on a sort of spectrum if you're talking about those 4 variables. So like on one side you have, so let's say you have like, shoot, what's the media publication that just has a bajillion quizzes?
BuzzFeed.
Yeah, BuzzFeed. BuzzFeed is like high volume, low quality, is trying to go for like really just kind of engaging, quick content that they can put out a large quantity of. And that's really to increase the throughput of the number of users and visitors to BuzzFeed. But BuzzFeed is never going to be like going to do breaking investigative journalism. They're not going to be provider of like new information. They're really more of like user-generated content and trying to go for a volume strategy.
Right.
Now, on the opposite end of the spectrum, you have something like the New York Times, where they are going for high quality content, lots of labor, lots of overhead. Their costs are extremely high, but the New York Times just gets a ridiculous number of citations from other publications because they produce content that nobody else has.
Right. So you're saying they either drive revenue from being cited by other publications and sort of the users point back towards that original primary source, and they incur higher costs for actually becoming and being that primary source. And there's a different strategy where they're actually originating clicks, and the way that they do that is by creating more clickbaity content.
Yeah, but BuzzFeed still might get more clicks than the New York Times, even though they're cited, because the places that cite the New York Times will cannibalize their traffic.
Fair
So
enough.
you have the New York Times, then say CNBC says, wow, this is a great story. We'll do a rewrite of their story using the sources and all the hard work that they've already done and put it on our own site. And because there's no way to really protect that intellectual property, it happens all the time.
Right.
Really, most media publications, they tend to copy each other's content. So
right.
The publication that takes on the burden of producing the content, they'll gain in terms of web authority, but they'll lose in terms of traffic and costs because they'll be incurring the cost while everyone else takes on the benefits.
That's really interesting. I've never looked at it in terms of that kind of trade-off. So for a niche publication like Crypto Briefing, especially one where there might not be a ton of primary content, how do you balance this short-term gain from increased clicks versus, of course, you're a growing business and you want to prioritize web authority in a way? How do you make those business decisions?
I mean, they're different business models, so it depends on what your priorities are. And two of the biggest publications in crypto probably embody that perfectly. So you have CoinDesk, which is going for more sourcing original content and being the reputation leader in terms of cryptocurrency news. And then you have Cointelegraph, which goes on the opposite end of the spectrum. And they target more of the volume-based play. And they make most of their money off of advertising and sponsorships, whereas CoinDesk they make almost none of their money off of advertising. They make most of their revenue from conferences and things that require a stronger reputation.
Got it. So how have you at Crypto Briefing, like what's your style of journalism and what do you see as sort of the best path forward for what you're working on?
It actually depends on what the goals and the objectives of the startup are. Because, for example, early on when Crypto Briefing was cash strapped, when I was first brought on, we really had to reduce our costs and change the structure of how the editorial was run. And at that time, our goal was just to make sure that we could lower our costs and remain break even in terms of traffic, even if that was at the risk of longer term, like losing out on longer term reputation. So starting out, it was more of a volume-based approach, but now when you want to achieve differentiation, it requires that you build out a more sort of like producing original content and actually going for improving that intangible reputation asset that you have and taking advantage of that.
Got it.
And
okay,
if you
cool.
want to achieve long-term profitability, then that's really you either have to be extremely efficient at producing a high volume of content cheaply, like better than anybody else, or you need to have a reputation that differentiates you from other media publications and leverage that to build some sort of community following around your content over other people's, where they actually have a preference for Crypto Briefing's content over, say, Cointelegraph.
Got it. Cool. Okay, yeah, I think that's a really interesting discussion. It's probably not a discussion that people in business school talk about in terms of these models. I think it's fascinating.
Yeah, so I would say that to answer your question finally, this is a really roundabout way to answer your question here, but really I would say that what I'm most proud about at, say, Crypto Slate and Crypto Briefing is developing these different data-driven approaches for doing journalism, and more than actually conducting the journalism, but managing the publication from a big picture level. How do you change the different inputs and measure your success as a media publication to drive forward long-term profitability and sustainability?
Right. Yeah, I think it takes this awareness of the different levers that you can pull and the short run, medium, and long run outcomes that they cause in order for you to conduct that intelligently. And these organizations are definitely lucky to have somebody like you who is capable of taking a broader view and understanding those levers.
Yeah, I would say that a media publication is a lot like a fast food restaurant with a networking component stapled on top of it, where the goods that you produce, you need to produce them just in time. You have a customer who drives in through the drive-thru, they order a burger and fries. You need to be able to produce that in 10 minutes and give it to them. And on top of that, if you're a media publication, you need to be building out, I guess the sourcing is kind of like inventory, where by building out your network, that's where you get your tips and where you get a lot of your stories is from the relationships that you build out. That's kind of like actually delivering the lettuce and tomatoes and cheese and hamburger patties to your fast food restaurant.
Cool. Yeah, I like that analogy. And I know you spend a lot of time developing that network and making sure that it's robust and healthy and that there's good information only. So thank you for doing that. Yeah, thank you. I think we can end on, I'd love to hear a bit about how you thought about the Blockchain Society, this organization's origin story, and sort of when you left it, what the vision was for you and maybe your hopes for the future, I guess.
Yeah, sure. I mean, when I first started the Blockchain Society, I didn't really know what to expect. Like, I just wanted to find other people who were excited and passionate about this emerging technology and wanted to explore what was really possible with it. And my brother and I, because we were building out these mining rigs, I was just like, wow, we could really teach other people through the kind of the tribulations that we went through, other people how to do this themselves profitably. And it's not that difficult. And if we share this knowledge with other people, maybe they could contribute something that they've learned back about blockchains. Because at that time, it was so early that nobody knew what the heck was going on. So it required a large body of people working collaboratively to really suss out what was valuable and what was interesting and what was a scam. And there was a lot of scams back then. So my original goal was just to find other like-minded people who were excited about blockchain and just work together with them and take on cool projects and see how we could get involved in this industry and potentially even work in this fast-growing, exciting industry as well. I would say that now that I've kind of been out of working actively with the Blockchain Society for a few years, I would say that my hope is in the long term, the Blockchain Society maintains its position as being compared to other clubs, a club that when people get involved in it, it's kind of like an intermediary between a frat where there's less of the hanging out and drinking and not really not really doing anything with the socializing component of it, but actually using that same energy and harnessing that networking and those friendships and those relationships to build out meaningful industry connections and take on cool projects.
Cool. Well, it's a treat to be able to pick your brain about all of your experiences and your hopes for the club that you put a lot of time and energy into. And we're definitely lucky that you came through UW to sort of seed these ideas in something that's touched a lot of people. So thank you, Mitch.
I just have to thank you and all the other officers for continuing to drive forward the club. Like, there were so many points where the club was on the brink of just dissolving. And because starting a new organization like a blockchain society, a lot like a startup, there's so many things that could kill you dead in the water. And when you first start out, that was one of the hardest things I learned about the blockchain society, is that if you want to get anything done as a founder, you have to do it yourself. And that meant that maintaining the social media presence, like posting every single day and organizing and wrangling the club meetings and producing the content, and basically doing everything in-house until you could recruit other people who would share the same vision and would be able to continue driving forward that vision for what the blockchain society could be.
Totally. Yeah, I completely agree. I think you did an excellent job of recruitment, and clearly that's been passed along. The people who are running the club now are incredibly capable, Chelsea and Zach and all of the others. So hopefully we're making you proud. And yeah, thank you so much for being here and giving us some of your time.
Oh, thank you. It's been really inspiring to see what you all have been able to make. Even all these years outside of the club, like, it's cool to see something that you started and seeing it grow beyond what you could have even possibly imagined when you started it.
Totally, totally. I think it gives me a lot of hope and inspiration that students can make decisions that have a lasting impact through a number of years. So it's awesome to see.
All right, thanks, Robbie. I appreciate it.
Thank you, Mitch.